Nifty Small Cap 100 Index has dropped over 14% this year. And if you have been investing in small cap mutual funds, you have probably noticed your portfolio taking a hit. Now, here's the big question. Should you hold, exit, or buy more? With the market in free fall, it's tempting to panic. But is that the right move, or is this actually a golden opportunity in disguise? Let's break it all down. While small caps are struggling, what history tells us, and most importantly, what you should do next. Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. Alright, so why exactly are small cap stocks crashing? It's not just bad luck. There are real reasons behind this sell-off. Number one, high valuations leading to a correction. Small caps saw massive gains over the last 2 years, trading at a 30 to 40% premium. A correction was bound to happen. Now that premium has reduced, but they are still not cheap yet. Number two, global uncertainty and FII selling. So foreign institutional investors have been pulling money out of Indian small caps thanks to factors like US inflation concerns and global trade policies. Number three, mean reversion in play. So markets generally move in cycles. Small caps outperform for 2 years straight. Now they are cooling down. It's just part of the game. But does this mean small caps are a bad investment? Not necessarily. Let's take a closer look at what's happening with small cap mutual funds. Is this a tough quarter, but is it a temporary setback? If you have been investing in small cap mutual funds, the last few months have been rough. Almost every small cap fund has delivered negative returns, with some losing over 12 to 15%. Sounds scary, right? But before you decide to exit, ask yourself this: has something fundamentally changed, or is this just a market correction? So why are small caps fund facing the heat? Number one reason is the sharp run-in in previous years. Some small cap funds gained 40 to 50% in a single year. Valuations went sky high and now they are adjusting. Number two, high valuations triggering sell-offs. As prices drop, investors who got in late are panicking and selling, making the fall even steeper. And number three, FIIs is pulling out. When foreign investors sell, it impacts the entire small cap space. So what's next? Should you hold, exit, or buy more? So what should investors especially do? Should they exit or stay? Here's the deal. If you're a long-term investor, this correction is not a reason to panic. In fact, it could be an opportunity. Hold if you're already invested. Small caps have historically bounced back stronger after corrections. So if your time horizon is 5+ years, sit tight. Don't invest in lump sums right now. The market could fall further. So avoid dumping all your money in at once. Instead, use SIPs, which are systematic investment plan, to average out your buying price. Number three, rebalance your portfolio if needed. Are small caps more than 25% of your equity allocation? If yes, consider shifting some money to large cap or hybrid funds to reduce risk. Still wondering if this is the right move for you? Let's talk about how to navigate this volatility wisely. So how should mutual fund investors handle this volatility? First, understand that volatility is normal. Like small caps are naturally volatile. A 14% drop sounds bad, but look at history. Every major correction has been followed by a strong recovery. So ask yourself, are you investing for the next 3 months or the next 5 years? If it's the latter, does the short-term dip even matter? Number two, switch from lump sum to SIPs. Timing the market is impossible. Instead of guessing when small caps will bottom out, invest systematically through SIPs. Markets will go up, markets will go down. But with SIPs, you're averaging out your cost and reducing risk. Third, check if you're overexposed to small caps. Small caps should not be the core of your portfolio. If they make up more than 20 to 25% of your equity allocation, consider diversifying into large caps or balanced funds. Would you put all your money in one stock? No, right? Then why put too much into one segment of the market? 4. Quality over quantity. Not all small caps are equal. Some small cap companies are strong, fundamentally sound businesses, others high risk bets with weak financials. This is why mutual fund selection matters. The best fund managers invest in high quality small caps, not just any random stock. So, what is the final takeaway? Is this a crisis or an opportunity? It depends on your approach. If you have a long term mindset, this correction could be a great chance to accumulate small caps at lower valuations. If you're looking for short term profits, this is not the time to gamble. The key is to stay calm, invest wisely, and focus on your long term financial goals. But if you're still unsure about your next move, why not talk to a professional like a certified financial planner? Click the link in the description for a free consultation with one of our certified financial planners and get expert guidance tailored to your financial goals. Also, don't forget to like this video, subscribe to our channel, and hit the bell icon so you never miss an important market update. Thank you for watching.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.